Welcome back. It's time to talk markets. Ashi Anand, CIO of IME Strategies at Valkyrie Investment Managers, is with us on the show. This IME is a PMS which focuses on the Indian listed digitally native platform businesses. And Ashi, we've spoken about this in the past. And I remember one of your funds in this IME portfolio, digital portfolio, was also Paytm. Now, in the last couple of weeks, the entire picture seems to have turned for Paytm. It was a sizable portion of your portfolio. What have you done with it? How are you approaching the developments in Paytm?
So, Paytm is actually clearly very unfortunate in terms of the events that have unfolded. And I think what you are seeing with Paytm is probably a larger issue around regulations and compliance around what RBI expects kind of in terms of KYC norms, etc., and what various fintechs and NBFCs are. So you've seen very, very strong growth in these companies, and they've not really been able to pace up with the kind of KYC requirements or the regulatory requirements required by RBI. Now, I think broadly, the way we look at it is compliance and regulations are probably best handled by regulated entities such as banks. And Paytm was really trying to do two things: operate a fintech and also operate a bank. All the problems have actually happened on the banking license. Now, Paytm has largely very clearly come out and stated that going forward, they will be doing nothing with Paytm Payments Bank. So really what you now have is the core fintech, right? And in terms of the fintech, the moment the fintech has partnered with various other leading private banks in terms of compliance and KYC, so Paytm is no longer responsible for this. I think that entire part gets taken care of. And now you can just focus on the core of Paytm's offerings, which is the Paytm app and the fintech. Right now, that is something which we believe is highly, highly valuable for merchants, for consumers. And that part of the business has basically now been safeguarded. What we are clearly going to see with Paytm is that over the next 1 or 2 quarters, there is clearly going to be negative impact in terms of growth. The UPI numbers for last month have recently come out. They've lost about 15% in terms of GMV. So the next 1 or 2 quarters may be quite weak. But I think what we are really focusing on, and this is the way digital has been structured, it's a long-term private equity fund. If you go down 3 to 5 years down the line, who is going to be owning, one, the payments infrastructure, and secondly, various forms of financial services that get distributed to relatively underserved parts of the markets that traditional banks can't service. Now, according to us, you're going to have 2 or 3 core players that are going to be dominating this market. Paytm will continue to be one of these. You will obviously have PhonePe, and Jio is probably one of the others that could emerge. Now, if you understand the value of the distribution of banking and various other financial services to this underserved market, this is a very, very large market opportunity. So if you look beyond the current kind of weakness and you just understand the way these platforms are going to evolve from a 3 to 5 year perspective, we are actually seeing a lot of value in Paytm at the current point in time. From a long-term perspective, we still find it to be a very interesting hold. And I think since they're no longer doing banking, that entire regulatory kind of those compliances are no longer actually really Paytm's issue any longer.
Do you ever consider, Ashi, of paring down your stake in Paytm because the stock is halved?
So we probably actually doing a bit on the other side. We are actually looking at the decline to probably average down. Unfortunately, the news came out and it just hit lower circuits, and you really couldn't trade into kind of exiting immediately on the news. But honestly, after the kind of declines that you've seen, we really seen this very attractive from a longer term opportunity. I think Paytm's dominance in the merchant space is something which you will get impacted, right? You are probably going to see 10, 15, 20% of merchants possibly transition. But I think various issues around the transition have now been addressed. If you're looking at the core technology of Paytm, their ability to kind of service various forms of merchants' requirements and actually get an innovative technology to service those needs, we really believe that Paytm is going to be a dominant provider of payment services to merchants, and the ability to then cross-sell various other forms of services and products which will really drive profitability. That we believe is probably fairly well entrenched.
Right. Ashi, just one final question on Paytm and a quick 30-second answer if you can. What does a normal retail investor do here? Because there may be a lot of people who may have received an IPO allotment at 2150, may have bought it at elevated levels of plus 1000, plus 1500. It's been a value destroyer at the end of the day. So how much long term is long term, and what does someone do with that in such a scenario when the stock price is at 400 right now?
So effectively, short term, I think Paytm will remain very volatile. Q4 and Q1 numbers are not going to look pretty at all. The entire lending business is basically going to vanish near term until kind of lenders don't see stability in terms of the monthly transacting users get comfortable back to lending. So if someone is looking at kind of the short term, you probably want to be very careful in terms of what your view is, because it can remain very volatile in the near term. However, if you have a longer term horizon, and we really see all digital platforms as longer term plays, we believe there is a lot of value which is there.
But Ashi, I was looking at your PMS portfolio, the micro trends PMS, and there are a lot of picks that you have which is within the real estate space. Now, the real estate space has seen a very sharp run up over the last 12 months, and now the stocks are correcting from their peaks. I can see in your portfolio you have picks like Sobha and DLF. What's your view on the real estate space? Do you see that this upcycle is poised to continue for another 3, 5, 7 years?
So this is a space which has done very well for us. And I think our core call, right? What you are always going to see in the short term is, especially some of these kind of sectors, volatility can be on the higher side. But the core view really on real estate is that 2010 to 2020 was largely a lost decade for the Indian real estate sector. Now, it is a direct play on discretionary consumerism. And discretionary consumption spends really start exploding very significantly once you cross a $2,000 per capita mark. Over the last decade, you saw a significant inventory overhang. That inventory overhang is clearly reducing across all cities. You have demand, which is clearly buoyant. And the interesting part is demand has actually remained buoyant even when interest rates moved up very significantly. We believe that real estate is a direct play on discretionary consumerism, urbanization, nuclearization of families, etc. As we go into the coming decade, we really see this as actually being a decade where listed real estate developers are going to do very well. We believe we are still in the early stages of the real estate upcycle. You are seeing a big value migration away from unorganized players towards organized players, which are also clearly benefiting in real estate companies. You just look at some of the kind of numbers. DLF has had a couple of quarters of $1 billion plus pre-sales. These were unheard of numbers, and we still believe you're still relatively early in the cycle. Now, the stocks may have run up a lot and possibly pricing in a lot of this already. But from a kind of 3 to 5 year perspective, we still see a lot of meat and growth ahead for real estate companies.
Ashi, great conversation. We just touched upon Paytm and the real estate, but great to hear your thoughts. Thank you very much for joining in.